Hey, everybody, welcome to April 14th, 2026, at the precipice of a major inflection point in Bitcoin. And this really tests basically the idea of accuracy-based thinking versus expectancy-based thinking, and why I think a shorter time frame day trading is superior to a lot of this portfolio stuff that I also do. And I'm just going to tell you why, because as you guys know, I gave this signal to short a couple days ago. It was like late Sunday. Took off half there, risk-free trade. Didn't get stopped out because I had a good trade location. Then had an automatic target right at this zone, hit it perfectly. As soon as it hit this, right, you know my strategy is to fade key reference areas on non-trending days and get on board the trend on trend days. And we have to figure out with the daily call and our pre-market factors for a trend whether this is going to be a trend day or not. The fact of the matter is that as it came down here, notice this was the largest 1 hour candle. Usually the largest candle is the candle for exhaustion. Also notice that it started trending at 6 a.m. and this was approximately 11. So it wasn't like towards the end of the day, like, the trend was still to be in question. And on the daily, it was hitting that all important 20 moving average that I told you about. I have 25% on my short trade. That means I have capital in the bag. Everything in my system and in my expectancy based thinking said, okay, well, then take your 75% now and fade this zone with a very small stop underneath here. That's a very smart indecision point. I mean, I could even go 1% down and be next into the next zone. If you can get your stop 1% into the next zone, you have excellent trade location. I kid you not, because I did not reload the portfolio around any of these 60 levels and I'm still in tether, there's a bias in me that's like, I don't want to root against my bigger picture portfolio. You know what I mean? I called this very well, but then like with the portfolio, you still have to think like you're half off. Like, even though there's still a bear market, just swing trade or position trade that. And that was a huge error on my part. When it got down here and made a double bottom, I almost wanted to go in. There was a Vegas here. For some reason, I kept looking at this below this 50, and I saw this below this 50, and I kept seeing this pattern. Like, it was about the same length. It's like the market never plays that. What I should have done is say, if the bears get overly bearish here and get trapped, we are going to have, and this was a bear flag at this point, a huge move up into here. This would have been a huge move for me. You know what I mean? And because I didn't reload that, I'm still thinking, oh, it's going to hit it, this resistance, that resistance, and it just hasn't. It has gone up way farther than I thought. Now, it's still a bull rally in a bigger picture bear market. I mean, we have to not consider, why is this a textbook bear market? Because once we got down here, right, we made a lower low than this last key swing low in the bull market. And we made this this topping double, triple top here, just like in other previous cycles. And we had from here a 50% retracement like we've had in every single cycle after the halving and the 4-year cycle thesis. What typically happens here is that once we get a strong rally up, and I'll show you another beauty principle perspective because we hit this 200 in a previous bear market, and I'll show you what happened. It marked the actual low. I'm sorry, the high of the bear market rally. The bull market rally. I'm sorry, the high of the bull market rally in the context of a bigger picture bear market. Right? It's just this is testing my patience here. Okay. You know what I mean? So I said, okay, I feel like I missed this move. I'm FOMOing like a motherfucker. Do you want to know why I'm FOMOing? Because I have so much tension in my neck. And it's because there's a lot of external factors, bigger time investors that are, whatever, retarded, quite frankly, calling me up and putting pressure on me to give them a signal to go in. And I'm saying, no, I have to stick to this system. I position trade the portfolio for everybody here. I got out here. So basically, I called the bear market right when this confirmation happened, right? This would be selling on strength. That's very professional. You can always get it in again. Then I said, if we get some type of major ×2 in weight candlestick pattern, like a bearish engulfing candlestick pattern that took out not just like the next day or two, it took out months of data here in the context of very potential reversal signals with the RSI crossing. Use your leg count principle. We were 8 leg counts up. We then broke all this data, right? That was the signal. confirmation wise, right? Over here, right, bear flag pops back up. Remember, I talked about this key high volume node, and sure enough, we got a huge move down. This bear flag was easier to spot because we kind of went from one line and then straight line into it. When you can kind of go one line and straight line from one end of the bear flag to the other, or just a balance range, even though this isn't a balance, this is a bear flag. This is a balance in a bull market, right? This is a bear flag in a bear market. But at this point, the bear market was just based on the magnitude of this move, right? And all those leg count principles. To get a textbook technical bear market, you need a lower low from the previous swing high. If you just want to go textbook classical TA, we were already calling a bear market up here. But if you want the confirmation of it, right, we broke that. Now we're in a real bear market. And I think once I saw that, I ignored the fact that we were at this high volume node. I needed to shift my bias because, right, multiple time frames, intraday bias is who's in control of the day. Short-term bias is who's in control of the last 1 to 4 days. These are rough estimates. Intermediate-term bias is who's in control of the last 2 weeks, 3 weeks to 1 week, depending. The last couple of weeks. Clearly, the intermediate term has been very bullish. And the big picture bias is who's controlled the last 4 months or so. 1 to 4 months. Obviously, bigger picture bias is down. Intermediate term bias is up. Short term is neutral. Right? But it's not just based on time factors, it's also based on the magnitude of move. So if we go up here, let me just hide this for a second. The larger time frame bias was up the entire time. That's why each one of these around the 200, these dips held. This was a bull flag. It's descending in the context of a bull market. These flags break to the upside typically, right? This was not a flag. This was just a trading range or a balance, like I say, a balance breakdown. This was basically a trading range too, a balance breakout. Very clear momentum uptick on this, right? When we were doing that. And remember, breaking back above the 200 signals bull market on, because we can just zoom out here. There's a clear uptrend here. Now we just have to think differently. We are in a bear market. But there's still going to be major trends like in previous bear markets of bull rallies. So down here, like the larger time frame bias as a day trader should have shifted bullish. We should have started only going long, and longs have really been in control for the most part, even though I'm still just as a human being biased short right now. Okay. I'm aware of my bias to be short. I'm taking only short day trades. I'm letting you know when the longs can come in by saying, hey, responsive buyers here. That's if people then want to shadow trade that long. I have a personal problem with it because I just explained to you my own personal bias, right, as a human being, even though I'm objectively stepping outside of it and saying, well, that's incorrect process. And then I have another thing that says in my mind, like, just make money with the income producing trades. My trading account is not going to affect the outcome of the bull market or not, or bear market, right? Same thing with my portfolio, right? But there's this bias that I'm against this larger time frame idea that I would like this to crash because that's what it's done in past cycles. It usually goes down another 50% for me. We're talking $40,000. I would be a fool not to take some portfolio reload positions on the way down here. That was the mistake I made here. I did not make that mistake here because we weren't in a bull market. I'm sorry, we weren't in a confirmed bear market. It was assumed up here, right, based on this. But now, based on textbook TA, this is a confirmed bear market. And, I just thought we were going to go. It was accuracy-based thinking. I should have said, hey, it's another leg count down. You were half off. There's going to be some type of a relief here. And a lot of bears got trapped there thinking it was going to go down more. They just saw that we got squiggly down here below this after a kind of a island reversal pattern. Same thing happened here. Like, it rhymes, but it never blah, blah. You know what I mean? It rhymes, but it doesn't have to be the same. They actually trap you here. So they trap the bears here. They are trying to create max pain so that I break my process and say, fuck it, I'm telling everyone to go all in right now. That's what the emotions want to do. Or at least I'm feeling that from outside forces or some kind of FOMO a little bit. It's mostly outside. I can control this. You know what I mean? I still think that we are going to go lower lows. And I moved these trend lines out of the way because I just wanted to see, what was happening here. We are in an ascending uptrend on the intermediate time frame. This is the larger time frame bias, right? The larger time frame bias, don't get confused. The larger time frame bias is not defined as the big picture bias. The larger time frame bias is a category in a weight in a system with all the other categories that then tells you whether you have time frame alignment or not, like who's in control for that. So basically every long that you took had a higher edge than every short in the last month once the time frame reversed. And it kind of was confirmed once we broke up here on volume because you broke up against this was holding for the entire this 50. So that's when, at the very least, this could have been a reload. There was a within the context of this, there was a inverse head and shoulders. Right, bigger picture patterns is a category in our holistic day trading system where we're rating all these categories. We take a snapshot of it right in our mind, and we can do a scan of it, or you can do it ahead of time and do a daily call and stick right to that. I just, like I said, I'm doing daily calls every time I do a snapshot in my mind right now. So just like I said, responsive buyers could step in here. That was sideways up. I just basically said I'm going to just take off half of my set 25% of my short, even though that was this, exits or entries, entries or exits. I should have went long. It was right at that damn 20 moving average, and it was also at key support, right? This is not only just this bear flag potential ascending rising wedge here. There's sort of a mixture of patterns because this key swing and this is sort of making this almost like a bounce creep up breakout. Once again, I said when we go straight line from one end of the balance to the other, that can often signal exhaustion. When you stair step price action on the way there, you're building market structure as you go, right? And that creates a stronger trend, right? Yeah, so straight lines exhaustion. When you kind of go up, when you're building the staircase pattern, it's more of an odds to break out. And we did. We broke out from this bounce breakout. A lot of folks right here were starting to go short. I shorted that key swing while also knowing this was also like a cup and handle against it. So like it didn't go straight line there. We were already seeing these. On top of it, every time there was a major pullback, I saw a very pronounced, this is such a great indicator for day traders. I don't see anyone else using this on YouTube, so I'm going to only make this private. This zero line reject was obviously for the bulls. It was so pronounced. Give it ×2 in your daily call. Smash up, right? Same here. And just like I said yesterday, I hated seeing that because I'm so biased for this to go lower, guys. It's not, I don't care about my short. I wanted to go long. If I could just not be a portfolio manager and a pure day trader, I would be so much better at this system. I might have to just eventually just do that and, distance myself from the other things that I do with the larger time frames, because there's a lot of opportunities. And when most of the time the markets are indecision sideways, there's a lot of trades now that you can go long and short within this almost the same day or the next day. And it's like, you just don't, there's non-directionality over the short term. And I understand that as a trader. Like I said, my own personal bias as a portfolio manager is I want this to go down. So I'm basically just putting on shorts, or just, I put that one day trading short on, like I said, Sunday, great half off, quad exit, perfect 25, and holding for the breakdown, didn't get it. Now, I'm not stopped out. This is another great zone. I said I almost shorted this and wanted to reload it, but I said one of the things that was against this short at that moment in time, it was at a key reference zone. We can fade price action on a key reference area zone if you think it has good odds to reverse. But just like the way this got there, right, we would be fading against intraday sustained momentum. And I said, that's just too much at this moment in time. It was being confirmed here. I'm glad it's reversing. I have a runner in, right? I gave up a lot of profits on my 25% all the way up here. I did not reload a short, although I could. I'm just not in a flow state to day trade because of these giant positions that I'm giving signals to investors that aren't in PPT and my own portfolio, that I am giving signals to people in PPT for. But it's just the outside phone calls and what they want and how they're always against my own system. It's irritating the shit out of me. They're stupid. You're dumb. Let me trade for you. Shut the fuck up. Right? And as we're coming up here, you could have shorted that again if you didn't have a runner in, because like I gave you guys a hint here, this was a triple bearish divergence. Price was at the same high here, same high there. You'd want it to be at least level with this, at least this one, and it just made another lower low. That gave me confidence that if you wanted to at least short this with the quad exit, you could be good. Like I said, this was also as responsive buyers. You could have took half off here, 75% off here, and then you hold runners in for both sides. Maybe one side breaks out, you keep holding a runner in. That's a possibility. But just as you can see, my only long trade in a long time. Okay, there was this breakout there, which I knew was a bad trade, but you could see I'm much more comfortable holding for this potential reversal, which just isn't there because you got to honor this uptrend every time we come up to this ascending trend line here. It's just with the zero line rejects. This momentum indicator for the zero line rejects has been stronger than every time we came up to the ascending resistance trend line. These are just ugly things. Like I did call the ghost pattern. I didn't see anybody on the internet call this one. We went up here, made a higher high, came up here, but this couldn't make a higher high. Anybody seen a ghost? Shorted that son of a bitch. I gave that signal live, smashed down here. Could have went all out and went long because I said that was a zero line reject. That's what I would be doing as a day trader. I wouldn't be holding runners right now too much. Or if I did hold one or two runners, I would be reloading long. I should be long right now. I gave you guys the signal to go long. Like I said, I'm personally biased. It's hard for me to go long because I want the portfolio to go down, but that's not the system. That's just my own challenge. But I will be giving you guys hints if you want to go long. And shit, maybe I should have went long here. Key resistance. This was key resistance, and now it broke it. Now it's key support, and it's in context with the trend line. And there was a crazy zero line reject. Now, like I said, I drew this here because this is now a trend line CCI pattern. The bullish setup would be if this breaks with conviction, then there's long setups. But like I said, if this holds here and we can't make a higher high, it becomes a bearish divergence, potentially transforming this into a Shamu pattern, and then we can get a bigger move down. Example would be for Shamu, we came up on this one, we broke down here, kind of like you see the blue one over, so that was a poor man zero line reject. But then we came up here, and then you saw this kind of the Shamu pull back. We'll see how this. I don't think this is going to happen, right? I think we'll get some pullback here, but it really depends on how we close. If we can get a reversal here, we can close down here. That could factor in. Like the Clarity Act was released today, right? But a lot of people already thought that was going to happen anyway, and these people were buying and buying and buying. So this could be a situation where the news was already factored into price. And you don't trade the news because what's not the news is one thing, but the confirmed bear market and how it behaves beauty principle around the 200 in a bear market confirmed is a different thing. Let's just go back in time and see how this key moving average, you can see it's really important. We're going to go back in time. Okay, so we're going back to the last bull run, very eerily similar. This is everyone's seeing this, guys. So just pay attention to this, right? This was here, then we broke down. A lot of people think this is where we are, but this move from this low to here, while strong back then, is not as strong as this move here percentage wise. It's a possibility that as we're coming up into here, you see how this touched this basically the first time it acted as resistance in a bear market, and we got a huge move down. It's a possibility that could play out again here because this is the first time this 200 has been tested in a confirmed bear market since March 2022. In a bear market, I don't want to say confirmed because I want to give it the same pattern. It needed to break this low. But classical TA is not necessarily is one aspect of it. You got to think like more creatively now. It's way more competitive as a market than this has ever been. Bitcoin's so much more volatile than the S&P. I mean, the S&P is almost like you just go up and up and up. Obviously, you don't want to be trying to call the tops. You saw how my market internals worked for a while for shorts, but then like they just got overvalued by these bigger picture, just absolute blow off top. Just stay out. That's probably the best move right now. But just an interesting idea that bear market 21, we hit this strong move down, and this was a move that went from 48 something down to 16. I mean, I don't know if anyone can does the math on that, but that is a huge move down. That is a huge move down. I mean, that would bring us lower than the 40, but possibly into the 30s. But that remains to be seen. It's impossible for people to. No way, it is impossible. I don't know. I mean, I remember no one thought it was when it was up here. The Trump Foundation, led by Eric Trump, said, "Hey, this is the last time you'd be able to buy Bitcoin under 90,000." I think he said it as this was breaking down, not at this moment in time. But I mean, that's not true, right? So it's like we got to not uh, take too much of these things into consideration and use this holistic system because that's the only edge we can have right now. Obviously, if you wanted to position a portfolio right now, right into this resistance zone at the apex of this, it's a very risky proposition. All this resistance is held, like I said, the 200. I showed you the beauty principle the last time we touched it. We could go back and just see how price behaved there more from a short-term bias, like the last 4 days. Just zoom out for a minute and get it. There we go. Right. Balance breakout. We're on. Boom, boom. Right. People probably thought that around then. Big move up. It's back on, guys, because it went from 69 down to 33. I mean, isn't that kind of familiar? That's like about what? 50%? That's what we just did. Like, except, I was here and I didn't reload the portfolio, and now everyone's jonesing. I'm not saying anyone listening is. I'm just saying in general. Bull market on, that's definitely going around in the news. I mean, look at the sentiment, and then smashed down from the 200. How did it look though? I mean, that's a spinning top with a hook from extremes, bounce breakout. Then what happened? Just behaves so differently then. It's harder to trade now that these institutions manipulate it, don't you think? Maybe I'm just projecting. Okay, bounce breakdown confirmation, but look at that zero line reject there. So maybe we get a bounce up. Kind of. Test in the 20 like we just did. Then another spinning top. All the while, like as long as it stays below the 200, game on for the bear idea, right? You could call that a balance breakout just like today, but you could also say, hey, I mean, well, that's in hindsight. We can't really do that yet. I'm not gonna say that. Not really an edge from a spinning top or candlestick perspective. Got a hammer candle. That's a bullish thing. And it's like zero line reject, so possibly bull. You know what I mean? So it's balancing. Like green, like see how it fakes them up, go out. That would have been that would almost look, if you imagine this as a camp here, it looked really bullish. Coming back down, almost a hook from extremes, and then smash. That's a bounce breakdown pattern. That's a confirmation breaking the 20. Then it's like a confirmed bear market now, or at least a short term, intermediate term bear. And then bam, like it's creeped down. I mean, that's what could happen real quick here, right? That's what I'm open to, but I'm also open to just some anomaly happening. I mean, I don't know the future here. This is a humbling, emotional market, but you got to just stay level headed. So we have an if then thing. If obviously if it breaks up here, closes at least a week, ideally two, above the 200, then there's good odds that we can then have a rally. I'll put a VRPP in here. We'll get a VWAP here, and then obviously the key swing. I would have to break this, and then with conviction to really then okay, now we're broke the last high. We're in some kind of head and shoulders, and now we're going to go up and test here, bull market on. But until that happens, if that happens, it's remains to be seen. So now you see what we're up against. Already getting some resistance there, reaction. You can see the ascending wedge, the bear flag, as acting as resistance. The index doesn't show what this shows here, which is this bearish divergence. I mean, right, to break this after a lot of people have been trading, and this is a freaking giant move that a lot of people are happy in, which we have shown that some of it is more dominated by futures than it is by spot. And if you look at the selling today, it was neutral, and it's been down a little bit to neutral. It's like you don't want it. You want it to be extreme momentum for a balanced breakout to then have a chance to test these. Let's just where's that object? There we go. Okay, so we talk about high volume nodes oscillating around them with volatility contraction, and with the time cycle of maturity increases the probability for a trend, which we got. We got this, and it launched from the VPEC, substantiating it. But like as I say, we also talk about high volume nodes. This is a low volume node. It's a area where buyers and sellers did not spend a lot of time transacting. It's just lacked that liquidity, and we got price rejection. It's not, it's the opposite of what you would get on a high volume node, which is price acceptance, time spent at price. Now, obviously, coming back down here would be a key resistance zone again, especially if it's in confluence with this trend line here, the bottom of the bear flag. I'll show it to you. It's a little bit different than just this is showing the ascending uptrend. So that's what the issue is. We don't have a lot of momentum, and that's what we got to keep an eye on. Add a low volume node, which can act as resistance just as much as a high volume node. That was the key point. With the beauty principle of touching this 200, not just in any 200, but in the context of a confirmed bear market, with the beauty principle of the last 4 year cycle that we did it acted as a major catalyst for a giant down move. So let's see if there's anything on the lower time frames that's interesting. Top down multiple time frame, right? Obviously, as we go down narrower in time frame, it has less of an edge as a larger time frame idea, but more of an execution tool or day trading. So you can see that, even as a day trader, I'm zoomed out on multiple screens. We talked about this head and shoulder pattern. I don't think we need to have that there again. So we're already getting a strong rejection down, which was my instinct that I could reload at least a short here, but I wanted to not at least fade against the momentum and honor the system there. Maybe we'll get some top building into tomorrow for another short reload. But I'm still have a runner in, so I am making money again as we come down here again. I'm not going to go all out here, but if I do see evidence that we're getting some balancing, there could be some longs. I'm going to be just open to it. But keep in mind, these horizontals aren't really showing direction. They're showing market structure and key. They're based on those key reference areas specifically that I showed you and listed in the channel. They're not just key swing highs and lows. They're based on all those different patterns. But they only come into play if they're in the right daily call trade plan ahead of time, because you want to basically do everything with the correct market context. So the other reason why I didn't short this, even though you're right, solid resistance, is one, I have an abundance mindset because I do have 25% on from a higher odds setup here, way higher odds than this one. There's also really good volume today, guys. Like, I'm not going to short against all that momentum. It's just not an edge. Now, I'm glad we're getting a rejection. I want this to go down to the moon so we can all get lower prices from our portfolio and from my short trade here, not to get the 25% that's still on, not to get stopped out of break even. So far, this has been I would say right now, almost a perfect execution of the quad exit based on my zones. Now, I don't think I would have been finessing if I took half off at this zone. This would have been brutal to sit through, and I don't think it's correct. Half off, risk off, abundance mindset, no need to short there. No need to take half off here either, because I'm already close enough to it, and no need to take half off here against this downward momentum. Hit this perfectly. That was a limit order set in. Boom. Now, remember, I have it set up on my bot that as soon as this takes half off, it automatically moves my stop to break even, which gives me a nice edge. With 75% off, I give you guys the signal to go long. I should have went long on this. If not, no, you could say I don't want to go against this momentum. Fine. It wasn't crazy that day. But into the next day, after you have a trend down day, you have lower odds, action, reaction, prior momentum category in your daily call of having another trend day, because it's consecutive trend days have lower odds. This is day trading stuff. Investors, you can tune out. You can make way more money day trading. I'm going to 100% shift all the way to it. Day quad exit day trading. I don't like this portfolio accuracy based thing that I have to do with goons. Right? Flow state, could have shorted that, but I just didn't want to get the cortisol spike. I think there's also a little bit of like, oh, I can just take a break. Every time I put a position on, if I'm not in an altered state of flow state, it's harder for me to do things. So yeah, so nice reaction down. No need to chase this. I doubt it reverses today. It'd be lower odds. Probably will go sideways for a little bit. There might be, if this does get a strong rejection down, if we get some strong selling tail, I mean, it'd be nice here if we get a strong rejection down based on the fact that we have a triple divergence on the CCI indicator. The momentum is really weak under this breakout. We're going back up into shorter term resistance in the context of a 200 moving average and a bear market here with a bear flag, which I'll draw now. Actually, you know what? I'll just go to this one where it's on. Yeah. So basically a bear flag is there's a parallel channel here and a parallel channel here, which is what I should do here. That's the basic definition of a bear flag. All right, you can see here we launched right from it. Um, Same thing. These are parallel. Now, I do have this trend line drawn here, and I guess I could draw one here, but this is the top of this bear flag is hitting this enough. This is a bear flag, but it's also a rising wedge in it that's getting compressed. Now, what does that volatility contraction, at least on this time frame, represent? It represents a spring that's coiled. What does a spring that's coiled eventually do when enough time and pressure is put to it? It explodes. And odds are still there's a good chance that we could dump to the downside. I don't want to sound like all the doesn't mean we can't go lower. No, I'm betting right now saying that it's going lower. I'm shorting this. I didn't reload. That's my bet. I'm putting my guns to it. Now, when I gave this one, I was in an abundance mindset because my I had a situation where I was already in profits on a reload of the portfolio, and a situation where do I capture profits or not? Rather than do I take a position or not, which is what the temptation is to do here based on all the expanded energy out that's against this idea that I'm counterintuitively putting together. I'm not saying other people aren't seeing these patterns too, but this is a situation where it's like this time is different, big time, because it's institutional versus basic TA and system based thinking. If you're a day trader, you don't have a problem with this because you're going to wait for a confirmation above this or below it for a breakout or a breakdown. Then you can shift your bias with the idea that even if we go up here over here and even this key swing high, these can all act as catalysts for another down move. You know, I'm just betting the possibility of a beauty principle that this 200 right now, where we are, could potentially be, you know, an entry point. I mean, I'm not, if I had to go long inverted here, I wouldn't be super excited about it. You know what I mean? I'm just inverting the scale. Let me save this. And if I go up to USDT, there's some bottom building here. But I mean, this was a strong, see how they hit this same thing Bitcoin was doing inverted in a crazy inverse zero line reject. I mean, we all saw that. That was the easy call yesterday. Some responsive buyers were going to step in. At least you could take half off at the VWAP, which you could have done. Right? These are exits, these are entries. It's a short, and that's a half off, 25 off. When I'm taking exits, it's technically a long entry. I mean, you could have faded this long, went all out. You could have faded this half off, not stopped out, and then you take 25 off. Maybe now you see this coming down, maybe you go all out. I don't know, maybe if you caught this on the way up, you would have got stopped out, but this is not a bad move from 78,336 to 79. I mean, as a day trader, you're getting edge there, to stop because you have great trade location near, like I said, near these key support and resistance zones that I draw based on those key reference area patterns. So there's an edge in that now. We're getting some resistance. God, this is my own personal bias. I just need to say it so I can objectively honor it. That's in the category of how do you feel about being long? I feel shitty every time I go long. I'm going to be honest with you. Doesn't mean that I don't see longs. I'm feeling shitty about it. I feel so much more comfortable going short right now. Maybe to my detriment, you know what I mean? But this is how I feel. So you could at least, so that's how I personally feel. Putting in that into those two categories is only a small probability of the whole holistic system. And that's the whole point of it. We didn't dishonor it, but we didn't give it so much weight that we let it overtake our actions. It's a nice way to like go with the momentum of the judo throw rather than try to stop something head on. So yeah, up into this, we broke today's high, strong momentum. Let's say you were sideways, right? This is why you have to do a snapshot in real time. Let's say you're sideways, meaning, you could have faded this long, and you held up to here. That means, oh, here's a double top. I can fade that. Oh, I'm sorry. This is not an intraday double top. I didn't see this line here. Take it back. Let's say you just had a zone here for a resistance zone, which I did have. I wasn't tempted to short that on first test because the intraday bias is bullish and we had a strong momentum move into it. You don't want to fade against strong momentum, especially when we've been in this, month long and a 5-week bull market. I mean, until it breaks that key zone, and by key zone, I'm talking about these levels that I've marked here. Because from a sideways perspective, if we do break this balance here, I'm gonna use both horizontal patterns. We need extra edges, guys. We're gonna use in terms of the bigger picture categories. I know I told you way back in the day that there's only bounce breakouts, false breakouts, balance breakdowns, and false breakdowns, and those are the main patterns, and key pullbacks based on fib ratios in confirmable markets as well. But those are the I'm taking that back. We need some, like I said, we're going to add bigger picture patterns. Like I said, we added the bear flag. We got to get the directional ones too. But if we can get both, that's really where we're going to get a strong edge. The confluence of directional and horizontal bigger picture patterns. When we get a sideways, this is if we break this, that's an intermediate term balance breakdown pattern. That's really bearish. Now let's zoom out for a higher time frame context. It's not like this 2 week balance breakdown pattern is happening near major support. Where is it happening, guys? It's happening near potentially major resistance after one leg count, two leg count, three leg count, four leg count, maybe five. I'm cheating. Now it's going for six. I mean, at some point, some position trader is going to be like, you know what? I'm taking profits. It takes one thing to change everything. Now, I don't want to just only focus on the scenario of how this might reverse here. Like I said, I would not be surprised as well if this does overshoot. Now, like I said, in 2021, like I just showed you, it did not do that. But remember, there's a CME gap. There's this high volume node here, and we have a key swing high here. Those are the major areas of resistance in the context of that bear market thesis, because we've made that lower low. We've gone from here to here. And typically happens is, like I said, another 50% drop, potentially here taking us into 40,000. What I said was most likely when this happens on first test, you will get a reaction. But remember I said all trends end in balance. And all balances end in trend is a basic principle. And if and with the caveat asterisk that some trends can end in a climax reversal, like that V recovery stuff, but those are, like I said, lower odds. So if we trend it up here, doesn't mean we're gonna have to go down now. What could happen is we just go sideways for a while around it. So there's no need to like chase a short here and then have this go up here and scare you or stop you out. If this is truly going to be the stopping point, like I said, it's not just any zone on this time frame. It's near the 200 moving average with the beauty principle of the 21 marking the last pullback that I showed you guys. And this key zone here, which is that key swing low, we got some problems. The bulls are gonna have to show insane momentum, but they 2.51%. This move is crazy today. But then you look at it and like, what's the volume underneath it? And it's neutral. It's not a lot of spot coming in. I'm not the only one that's shorted here. And, as it's going up, part of me is like, just take your 25% off. You're losing a huge amount of money right now. It's 25% off. I was losing on a big move up here. And part of me is like, no, I'm going to honor the quad exit. I don't care. Because, like, what if this is the low? I'm taking a risk-free chance for another short. And if it really breaks down, I might be able to hold this son of a bitch Corby style down to this VWAP while I'm taking other longs, ideally. So, yeah, once it breaks this key rep. So I talked to you about the horizontal bigger picture pattern here breakdown. That's one pattern. In confluence now with this trend line, if we do get a reversal, if we do break this trend line, now we have a directional bigger picture bear flag with that horizontal intermediate term breakdown. That's that's a bigger picture pattern category of sideways to down. I mean, actually down with extremeness to it. You can actually give it a weight times 2 because it's breaking 2 of them. Just like on, prior momentum, if it's super extreme, then it shifts the bias. This is a balanced breakdown pattern. That's extreme, but on extreme momentum. That's scary. It broke the flag. That's what you want to see if this is truly going to be the balance breakdown. And this is truly going to be the balance breakout. And we're all wrong about this. And now we have the ultimate lows here. Maybe it goes up here, goes sideways, forms a shoulder, inverse head and shoulders, and breaks out. What I'd like to see is this type of momentum on the way down with this type of volume. And, we've had this descending volume and an ATR of ranges of approximately 2,139. That's not, it's going towards a contraction level with an idea that from a time perspective and a pattern perspective, we're going to go into a expansion cycle of directionality. We just don't know the direction yet, short term yet. And now let's go to the weekly now. We can talk about time in a different way. look at this Bitcoin time cycle chart. And we are right. This is an exciting time. Monday, May 11th, the week thereof. Um, Generally speaking, around it is some type of resolution that may not seem like it's happening in real time, but a couple of weeks later, you can zoom out and say, "Oh my God, that was the double bottom, and then we started an uptrend," or that was the last swing shoulder, then we went to a bear market, or um, here we were in a bull flag in a confirmed bull market. We broke this high, and now this making the double bottom now with the maturity of the balance right at this inflection point. Now this sideways phase is going to now go higher odds for an uptrend because it's a sideways pullback in the context of a bigger picture bull market. This is potentially a sideways up range in the context of a bigger picture bear market. That's potentially where we're at. Oops. This is an interesting chart in this 2 weeks. I showed you that anytime we had an inverse zero line reject of this type of energy going back, not on this chart on Bybit, but on the index, it had 90% bearish reversal rate. That's interesting. But like I said, we're looking at a lot of different time frames. Not all these signals pan out on every single time frame. As you can see, this is the RSI is bullish on the 2 week, but if we go to the 2 day, which is more for the intermediate term, it shows that it's, if you guys want to know like a sort of a confirmed signal, if you get above 80, right, it's now in overbought territory, showing it's overbought. And then when you break back below 80, it sort of can potentially confirm in holding below it that you're now in a downtrend. But as I said, this is only 2 days. It can go back and forth. And just going sideways there, the momentum is going down on the 2 day. And then this is the RSI stochastic more day to day. This is more showing trend reversals through time. And if you just notice what happens here, we go up here, the indicator says it's a bear. Well, not really, but a pretty strong move down. But then we understand time frame analysis. We just made a higher high. That's a double bottom. We're in a bull market still. It didn't really call that well. But remember, at the time, that your system would say to go long here. This was saying it was a bull here. Right now we're in a bear. Notice it didn't say bull yet. I'm not saying this is gospel, but just be aware of what how to read this. Then we go up here, test it again, move down, but still bull market. Now we're up here. We couldn't even get there, right? Couldn't even get there. And if those are the two key swing highs, that's the third one. It's sort of dancing now in the 2 day. Try to break out, then it's below it. It's just if we get a substantial move down from it, then this is going to be holding as resistance, can confirm the momentum going down. I see a resolution to this pattern happening relatively soon now because we are in this time cycle chart, which has historically predicted a phase shift in the market. And that's what it will potentially produce. Okay, now let's see what other time frames we'll look at here. Go to the weekly. Weekly showing that we crossed above 80 into overbought territory, but like I said, unlike the 2 day, which crossed then sideways back below 80 or is about to, or well, it is now a little bit, but it hasn't confirmed it. That's what you want to see on the weekly, but obviously it's still above it. Notice that when we came up here, starting to be oversold, but still going sideways, holding above it. Yeah, we got some more price action, but then eventually once it made a bearish divergence in the RSI, and this made a newer high, and then the orange crossed above the blue, confirming this downtrend. We still have the blue, for the most part, in an uptrend above the orange, but now, like I said, above the 80 into that 100 level. Typical sideways to down reversal. We'll have to see how this plays out. It's interesting that this is happening right at the inflection zone. I didn't see that happening too often, that the RSI would get into this zone up here at this time. Well, like I said, it doesn't matter. It's going to do its thing anyway. On the weekly, there is a hook from extreme, but it's not really an overshoot of any, mind you, and it's just been lagging. So it's not everything is just still in this stalemate. It's a very tough time to be in. So you got to keep level-headed and make a plan ahead of time of what to do. Like I said, this is probably going to go sideways or even a pullback here. No need to get greedy and try to chase a short. You don't short against momentum like this, straight up, in my opinion. based on my system. So I'm hitting a lot of different parameters here as we wind down. And based on the fact that no one showed up, which is fine. I mean, this is a tiring market. I imagine I'm not the only one here that's a little waiting for a resolution here. And this, because one of the toughest emotions to be in is being comfortable in the uncertainty zone. And that's typically where we are because, you know, you never know a pattern till it confirms. And we're in a situation where this could be the beginning of the low. Like I said, we've trying to make a higher high. This really hasn't on the daily. You can see it better on this time frame that we've made this triple divergence. That other chart basically is showing the bear flag resistance. This one's kind of showing this rising wedge, but I'm kind of using both. I kind of move these out of the way just so I can see price a little bit. How well is this divergence working? Well, up here there was a short setup on the second test of the 200 that I gave, that we are now 75% off in profits, nearing almost stopped out, but 25 on with a stop to break even, quad exit style. And even when there was a just a regular divergence on the first test here, it produced sort of an edge. That was sort of a hook from extreme. And then there was this ghost pattern as well, showing the two highs here, which is simply just a head and shoulders if you want to just talk about what a ghost is. Now we have a double divergence. I might have called it a triple divergence, but that's not the case because we made one low and it's a double divergence. Nevertheless, it's stronger. You know, it's a double divergence is stronger than a regular divergence. And we're right up there testing it with a confirmed high, adding market structure to the top of a sideways channel. So to get a balanced breakout out of here, you're going to need a lot of strength. This bounced and made a balanced breakout, and we have there. You know, like I said, the snapshot that I provided to you has pretty much all categories, but then there's a category called the 100% range principle that it's not something that I actually wrote in the daily call, but I'm always aware of it. Typically, if you're in a balanced breakout pattern, you typically can move, 100% of the range that you broke from before you get exhausted. So keep that in mind that even if we get a break above here and close the CME gap, shoot up 84, 85, this is now 100% exhausted, could still ignite that idea. Max pain is what that would produce for people that aren't positioned. And then what that would do is that would lure in inexperienced if I was going to set people up for a trap, if I was an institution running a scam like this. Hang on one sec. Okay. What I would do is I would try to break up here. I mean, even this is going to lure people in because they saw a 3% move. Create max pain, lure in retail, and then smash my Bitcoin sells into that liquidity, causing that other. And then, this is the typical structure that if it does break the trend line, it starts a reversal of the bias and it could really start to, like I said, create a strong downtrend out of a balance that you can only start to see that this was a trend in hindsight, but that's what could potentially happen here. That's what I would do if I was going to try to set up retail, if I was an institution, corrupt guy, engineering it with my team, setting up a sell wall, helping this breakout, setting up our sell walls ahead of time, and then smashing into this lower liquidity level, and then buying up, bargain prices as retail gets destroyed. That would be one. I mean, if their goal is to control the financial system and they need to buy up all the Bitcoin to do it, that's a way to get Bitcoin back into more of their hands. So we live in a crazy ass world where human beings are buying little stores of digital assets on computers that are shooting electricity, often doing things that people don't appreciate or unaware of. So it's a weird time to be doing this. The only thing that can kind of keep us sane, I think, is the systems that we're overlaying it over, because we've seen how they can work holistically over and over again. And then we can go into our observer mode and see, like, how is the human being dealing with it? Are we operating it to the best of our ability? So that, unless you're one of these guys that's engineering a big old scheme, this is our Nancy Pelosi. This has insider info. This is our best shot to not get lured into this trap here by looking at the system holistically. Like I said, the Clarity Act could produce the mini alt season, which we've had a mini alt season here. This is pretty awesome. I sorry if I'm not um, jumping on board the bull train to get the energy back into the room here, but I just want to objectively call it based on the system. And when this thing does, if this thing does play out, the reload will come. It's just to reload right now underneath the bear flag, underneath the 200, when the 221.21 that actually marked the top, is a very scary proposition. Despite this intraday bullish price action, despite the bullish intermediate term bias here, which is very strong, has been the dominant force. Despite that, zoom out. Are we in a bull market here? Or are we just 50% down, which then on the next rally goes another 50% down? Typically, October will be around here. But no need to not DCA on the way down now. We're not going to make that mistake again. I mean, there could be a strong reaction at this 50 when we go towards the, let's go to the better one that's really there for that purpose. If we get down, let's say here, 72, that could be major resistance too, that we get a strong move up. Then we get that stronger rally up here, and then we get the eventual movement. I mean, there's so many scenarios here. We have to be very vigilant with our if-then statements, constantly doing our daily call snapshots in order to get a better picture, not to be lured in by these emotional traps. And we are participating on the shorter time frame. We have to just give ourselves some credit, guys. We have a short trade on. Some of you may have been shadowing me or saw the short yourself, and now are in profits as well. There are other folks that have shorted and will not use a quad exit or take any profits here because they are, like I said, taking 9% risk on an 85,000 to get a giant move down if they're right. I mean, all the more power to them, but we can get in again. We don't want to take that kind of risk here. We'll have a more conservative approach at this certain time. Let's just take a look at the ethos of the rest of the market. I mean, does this look super healthy to you, especially Ethereum? I mean, Ethereum has been into this descending channel. It hasn't made a higher high like Bitcoin in terms of the last couple weeks here, last month, right? And like I said before, interestingly enough, I can show you a pattern that while Bitcoin was going higher highs here, see how Bitcoin was going higher highs here? What was Ethereum doing? It was making lower lows. And same thing when it went down to this flag. This is making lower lows, and Bitcoin made higher highs. This has made lower lows, and Bitcoin's made higher highs. Eeringly similar, and then they both dump. Interesting. That's that observation. It's like, what would you? It's just an observation, really, that you would think for a larger time frame portfolio position. I can't really factor it into a day trade. What I just said, we don't really have a category. Maybe a beauty principle thing, but that's not really an immediate moving average behavioral thing that we're looking at for an entry or not. It's just an observation. It's just interesting that we're having that kind of similarity. Just looking at the fact that the principle that previous market behavior influences future market behavior. Based on that, I would not be surprised if we did get a dump. I mean, potentially the highs of the rally are potentially in. And, maybe the Ethereum fact that it's super weak is giving us that heads up. We haven't been able to break above this moving average. ES just insane. I don't know what to do. I mean, there's nothing really. You can't really have a trade here. Even today, the internals were supporting it. Even the last couple of days when the internals were showing bearish downtrends, which got us a couple of shorts, we eventually got stopped out of it. Just stay out of this one until this really figures itself out. If you want to call this a balance, which I'm not really, it's not really a sideways. It's just an idea of looking at different things. I have this 100% range principle drawn here. I like this one better than what I just showed you before. I'm not going to count that one. Let's get rid of that because it's not a real. This, you have a bounce breakout here, a retest of the bounce breakout. Clearly, we went up and then we went down and then we went up, and then that's a balance, and then a very volatile balance where on smaller time frames there's trends within the balance. Then we have the bounce breakout and, almost retesting that bounce breakout area, and then a huge move up. Now this time, huge move up, V pattern, we broke out. But keep in mind that the V went all the way down here, and then the V neckline matched this neckline near the balance breakout spot. And then we got that another 100%, not really quite 100%, but 50, 60, 70% move. This, if we clone this, is this clone. Okay. So keep in mind that that V was there. Now this V happened here. That's where the neckline is. And now we just got another 100% move. And we're at the 100% range principle of this giant from January 24 to June 25th. That's multi-year, year and a half. So significant amount of time, larger time frame pattern, the bigger the pattern, the more significance. You clone this 100% range principle. As we're getting near here, I would not be surprised if, based on human behavior, when things double, people like to take profit. Would not be surprised. If this starts to dump, that would really help the short-term Bitcoin bears take Bitcoin down to a more manageable level so we can reload now. No one wants to get in right now at this inflection point where it could go either way. Bear stepping in here, volume dying down. Let's save this. It's a really good idea, this 100% ES idea up here, that we should be very cautious up here. Going up here, 145%. Very extreme. Very extreme amount of volume, but which explains the 3%. But where is it coming from? What's the range on the day? If we go today, I mean, it's a little bit higher because this is from the body of the high and close, not the actual range. But I mean, it's not extreme like you'd expect with 145%. It would be extreme. Very, very interesting now to keep our eyes on why this is not having more of a stronger move up. But we'll see. Holding below here, it's resistance until broken. So keep that in mind. Let's see. So I think I covered everything, right? What the idea of our situation is, and we need to break above here to shift the bias short term for these other targets that I mentioned. If we can hold below here and retest and break the trend line and the 20 moving average, then we have a balanced breakdown pattern and a directional breakdown pattern, which increases the odds for the bear flag pull bigger picture pattern to manifest, which could take us down to, the 40, 52,000 area. Not without problems down here first, which will be one of some of our first dollar cost average areas. But until that happens, we might get a breakout. We might close the CMEA gap, maybe higher. I don't know. We don't know the future, but we can't simply just follow only the last couple months of data here from early April now, a month and a half of data, and say now that's the only thing we can look at, is because we'll zoom out and say, okay, we are in a lower low of a confirmed now bear market. Typically what happens 4-year cycle wise, it goes 50% from here. So cycle wise, and we know this is the week of May 11th. So this is despite being a difficult time, this is going to be an exciting time in the market for everybody. So stay alert, stay vigilant, and I'll see you guys in the room. Good night.